to have Noah and John from UrbanDigs. Again, the UrbanDigs is the provider, and they do kind of the background and all the analytics for our quarterly market report, which will be coming out at the end of this week. So again, it's a great tool and resource that you can use to send to your clients to keep people updated on what's going on. And they have graciously joined us for kind of a little update to talk about the market, talk about what's going on, and just kind of really show the power of their site as an agent to get information out. And again, the whole point of UrbanDigs, I think, is to keep people informed of the market, things on the market, what's happening with the market, and things like that. So thank you, John and Noah, again, and I'll let you guys take it away.
Yeah, thanks. I just want to say, so everyone, at the very bottom of your screen, like down in this section, there's a little button that says chat. So if you open that up on the side window, side pane, there's going to be a little chat window. As we're going, if you got a question, you can just type it in there, and then we'll kind of answer questions sort of on the fly. And with that, let's begin.
Great. Thank you, Jason. Thank you, John. This is Noah from UrbanDigs. That was John, my partner. Yeah, get that chat going, guys. I'm going to talk about a few things, and chances are you guys are going to have questions. So John's job is going to be looking at your questions and letting me know as I go. I'm going to do a screen share. I think that's going to be the easiest thing for me to do. So hopefully you guys could all see my screen right now. So listen, we're going to be talking about this constantly. All right. I'm going to give you guys a class now and show you guys what me and John are looking at and what me and John are thinking and what we hear from a lot of other people. We'll try to consolidate that in class and show you some good features. But, we have a YouTube channel, if you go to UrbanDigs, and we're going to talk about all this kind of stuff through our podcasts and through individual things every 3-4 times a week going forward, answering questions. So that's that. Okay. So this is the way I like to look at it, right? And I'm on UrbanDigs, and the first thing I'm going to do is I'm going to go to my charts room in the background. So let that load up for now. We'll come back to the dashboard and we'll show you some stuff there later on. So here's what you need to understand, and this is what you kind of want to tell clients in some capacity, in addition to everything that you're telling them already. We are in a temporary, dislocated marketplace, okay? This happens in times of extreme credit stress, extreme market stress. We've seen both of those. Very rarely do we see it in times of lockdown, general economic shutdown, which is kind of unprecedented. I don't recall anything like this in my entire life. All right, I'm sure a lot of you feel the same. So we're adapting to a virtual world, right? We have to await guidelines for that virtual world. So we need guidelines on legal. What do the attorneys need to do to sign contracts? If I'm lucky enough to get a deal going right now and I do all the right stuff, I need to get that contract signed. Due diligence documents. We need guidelines. We need guidelines on banks, lender side. We need guidelines from revenue. We need guidelines on management companies, co-op boards, appraisals, right? All these things, due diligence documents, board minutes. So that needs to happen. So you guys need to talk to the people that are going up here and kind of, we need to get that voice going so we could do business. Do business for the next 4 weeks. And if this extends into May, we want to be able to do business. Okay, so that's number one. So we're in this temporary dislocation. What's going on right now is two things. Both supply and demand is falling, but supply is falling faster than demand. Okay, and the first thing I want to show you guys is this market pulse number on UrbanDigs. I always tout this number whenever I go to classes. This is my barometer of the market. This is a ratio of supply and demand. 44 is 44%. That tells me that pending sales at 2568 is 44% of supply right now, right? So it's doing the measurements for me. If it rises, the market's strong, stronger. Leverage going to sellers. If that falls, the market's weakening. Leverage going to buyers, right? This has been rising. This has been rising. Why is it rising? It's rising because supply is coming down faster than demand. So look at this. We were actually, just to be very clear, right? Let's just understand where we've come from to get where we are, and then we'll go into everything going on now. We have seen this market in 2013, 2014, and 2015, highly seller's market, right here. You can see it. This is your barometer of the market. Over 2015, since then, we've seen a progressive deflationary decline, which we thought it bottomed out mid last year. John and I are on record for thinking that the bottom was around mid-fall of 2019. We got there because we look at these numbers. That's all. That's how we get there. That's our expertise, looking at this chart right here. Takes 2 seconds. We were coming out of it, right? We were coming out of it. The last 4 months before this hit were strong. You guys probably felt it. We were coming out of it. So now it hit, right? Why is this going up? It's going up because, number one, let me go back to the chart room here. I got to show you a couple things. Number one, there's 2 forces going on. On the sell side, right? Less stuff is coming on the market. So let me show you how I know this, right? So I'm going to do a chart of supply, monthly new supply. And I'm going to hit the 3-year button just to make this a little cleaner, okay? And I'm going to go down and I'm going to hover over March. You guys with me? I see 1792, 1787, 1768. Over the last 3 years, March, this month, brought in, let's call it 1,780 new listings. That's like what normal is, okay? 1780. Now I'm going to go to my dashboard. I'm going to go active. I go 1 month. 824. Okay? So force number one, way fewer listings are coming onto the market. Force number two, off market is rising. 1,153. Okay? So off market is rising. So we got not a lot of stuff coming on when it's usually our active season, and we got a lot of stuff going off. And at the same time, we got demand going down. So we got both of them going down, but we got supply going down faster. So this is an interesting dynamic, right? We're in virtual reality here. We're trying to figure out how to do business in a virtual sense. Meanwhile, this market's dislocated. So what you need to know is on the buy side, the bids that you're going to get, and this is the kind of conversation you need to have with your sellers, right? Because I think they get it. Honestly, I think sellers know. I mean, how could they not? Being in lockdown with no showings, with the market down 25, 30%, they got to know something bad's going on. It's not going to help bids, right?
Right, Noah, can you just take one quick break and explain, someone asked, what do you mean by off market?
How many listings are coming off the market?
So off the market, the way we track off market is we track permanently off the market and temporarily off the market in RLS. So if you take it off the market, basically take it away from active and market POTM or TOTM, we're going to call that off the market. And basically it's no longer for sale. It doesn't count as active inventory, it counts as off market inventory. I hope that answers the question.
Right. That sellers tend to take listings off market when they don't think they're going to get their bids. So off market tends to rise in uncertain times. Off market shouldn't be high. It shouldn't. It only should be high if the market's dislocating, which it is now. We're in it. We're in it. You are neck deep, inning number 2 of what we think is going to be a 9-inning game, and it could go extra innings. That's a good way of looking at this. Hopefully it doesn't. May 1st is when the restrictions are set to ease. Does it happen? Right? Now, I hope it happens. It's the best thing we could hope for. And when that happens, now we got to worry about people getting back to their everyday life. Is on May 1st, everyone going to jump in and come in? No, it might take another month or so. So I kind of think if it's May 1st, I think give us another month, maybe June, July, things are slowly getting back to normal, right? So I expect the dislocation to happen for the next 3 to 4 months, just understanding ahead. That means buyers' bids are going to be low, sellers' bids are going to be here. The only people doing deals are going to be sellers that have to liquidate. For whatever reason, I just want out. I don't want to deal with this anymore. I got plenty of profits. I want out. 2, I got a margin call. I got to liquidate for a margin call. I need cash or something, other extenuating circumstance. I'm forced to sell in the next 60 days. So I got to hit the bid, right? So now the buyers that are out there, the bids, you're going to notice that these bids are going to be very opportunistic kind of buyers. FOMO, fear of missing out types of buyers. These are the buyers that were waiting for this. Okay, they were waiting for it to come. And now it's here. And they probably think, some of them think the world's ending, some of them think that we're going to crash and maybe whatever, but they're pricing this in. So their bids are going to be 15%, 20%, 25% below what's going on. So you got to manage your expectations of 2 things. You got to manage your expectations of your sellers and let them know that if you're choosing to leave the listing active, which is good because they shut down days on market, so you're not getting penalized by time, right? Let everyone browse. They're home, browsing, let them see it, right? But to leave it active, most sellers are choosing to bide their time. Most sellers, not all, most. I don't know what the percentage is. You can't measure it, okay? So you get the buyers that are gonna bid 15, 20%. The sellers are gonna get these bids down 15, 20%, and you're gonna have conversations with them, and they're gonna tell you, I don't wanna hit that, just tell them that I'm not even entertaining it. And then some of them, 1 out of 5, will entertain it. So you're gonna go down to a very thinly traded market, This is gonna have an asterisk next to it. March, April is gonna have an asterisk next to it at the end of the day. This is the Corona period. Let's ignore that, because at some point, sales volumes are gonna drop, and at some point, the prices are probably gonna temporarily drop as well, reflecting what we're in right now, right? So sellers need to understand what types of bids are about to come on the market, opportunistic. Buyers need to understand that, hey man, you're dealing with less inventory. This is not the same market as it was 2 months ago, where there was a lot of inventory. John, we talked about this all the time. John, how buyers had options. They have options in negotiation.
And someone said that, it said that, and I just want to quote, it says, seems to me that sellers who are listing now must really need to sell. So I just want to talk about that briefly. And yes, we don't know what fraction of sellers actually have to sell. That's something that's going to be borne out over time as we watch. And we can talk about this now, is how to watch what's happening in contract and active listings. But, part of what makes this period so confusing now is revenue suspended. And as Noah mentioned, the days on market. So a lot of sellers who would have normally said, you know what, the market's more or less frozen, I want to take my listings off the market, are leaving them on. So they are now still technically active, but the days on market's not counting. So of those people, how many of those need to sell? That's a great question. I don't know. And I'm sure you're going to have opportunistic buyers making low balls across a wide swath of properties, but how many of the sellers are going to hit? I think that remains to be seen. I also think that I tend to think there is a measure of pent up demand as people are sort of stuck in their homes right now, and they're probably going crazy with pets and significant others in a 1-bedroom or a studio. And they're thinking, oh my God, a 2-bedroom right now sounds like heaven. I just want to vicariously look at 2 bedrooms. So they're probably shopping out there for that 2nd bedroom. I also happen to think, this is one of my theories, is that there's going to be a baby boom in the spring. And I think you might have people start thinking, gosh, I'm actually going to need more space in the spring. So yes, there are a lot of sellers who are not eager to hit those low bids right now, but I feel like the sellers who are on the market are actually sellers. They're just sellers at a price. I don't know where that price is. And I think it sort of remains to be seen once the buyers come back into the market. And as Noah mentioned, that's sort of anybody's guess as to when that's going to happen.
Yeah, and I think buyers need to understand. I think buyers need to understand from their agents that, look, you number one, instead of 5 good options that you would have seen 2 months ago, you're probably only going to see 3 good options. That's number one, because less stuff is on the market. And number 2, of those 3 options, do any of these sellers want to entertain your bid that's going to be down 15, 20%? Because all those buyers are saying, hey, what kind of deal could I get? Now's the time to buy, right? Let me get a deal. Oh man, yeah, you can get a deal. You bid down 10%, 50%, 20%. Yeah, you'll get it. Yeah. Now's the time. But you got to understand, you got to have the seller willing to do it. That's my point. And we're about to enter this period. The people I'm talking to, their sellers are not interested in doing it. So it's going to be very interesting going into this period as brokers and advising our clients that it's going to be a thinly traded period where we usually get 1,000 sales volume and we're going to get only 200 or 300. So, and we're going to see later where those deals are happening. So just keep that in the back of your head. To show you guys how we're tracking this in real time, we go to the dashboard. Okay. I'm on my dashboard here.
Let me just jump in before Noah does this. And
Sure.
That's to say that all of you guys through Weichert have your own UrbanDigs account. If you have an account issue, please just let us know and we'll sort that out. But everyone should have their own account. And so everybody should be able to do exactly what Noah's doing here. Just log into UrbanDigs and you have full access to everything we're about to do.
Thank you, John. So basically I'm going to do 1 week, take my time scale and do 1 week active. Okay. And I could see over the last week, 67 came on. Okay. I could change that to contract signed, 68. That active should have been probably something like, I don't know, 400, 4 something, and that contract signed probably should have been something like 300. That's what it should have been. So 400 down to 67, 300 down to 68. You know, you can see what I'm talking about with supply coming down. I'm going to keep an eye on this. How many came on yesterday? How many contracts signed yesterday? 13. You know, how many active? So there's still deals going on. Actives 13. You know, so this is the tools that I'm looking at to see what's going on. Now I could still do my comps analysis. All right, I could still do my comps analysis. Let me just tell you, like you change this to the default, right? I could still, let me just do a neighborhood, all right? I'm gonna do a sample CMA, all right? So I have a property that's selling, it's a 2-bedroom, 2-bath in Chelsea, okay? Let's just, 2-bedroom only. And I haven't done this, so I don't know what it's gonna be there. 2-bath, and I don't know, let's say co-op, see what's there. It's not gonna be a lot. Okay, 21, right? I could use my advanced search filters if I want to and add this on if I wanted to, right? I could do a number of things. I could save this search and I could label it, you know, Jack wanted me to look at Chelsea, new actives. Okay, this is one of my clients. Great. So now it's going to give me updates every single day and tell me new actives that come in. I could save it and I can go contract signed. Jack wanted to show contract signed. You could change different states, right? That's number one. Number two, you can create a CMA report. Okay? CMA report is a comparable market analysis. So Jack, he's got the 2-bedroom, 2-bath co-op in Chelsea. All right, well, what else is out there that's a 2-bedroom, 2-bath co-op in Chelsea? Well, I got 21. I'm gonna load all of these, right? Active, in contract, I got 14, closed, I got 45. We'll get to that, okay? I can go here, I could select what I want. I could select all visible. All of my stats show up. Everything I need for sale. Average price per square foot, average price, days on market. I could now toggle and go right to in contract. Start doing my in contract ones, okay? And while I'm down here, I can go click through these listings and get everything I need to know whether or not, oh, I don't want to include this one for whatever reason. Only include what you want. Off market, oh, I'm sorry, closed. It's closed, go do it. So at the end of the day, you're getting all your statistics and you got off market over here, of course, right? Go through this, you pick what you need, and now you have a conversation. Hey, Jack, you know, there's 21 listings that are for sale, there's 10 listings in contract, there's 20 listings that are similar that close, and there's 44 listings, whatever it is, 28 listings off market, and here's where all of them are at, right? Export this and export the PDF.
Yeah, could you just export the PDF? Someone else has a question about what the PDF looks like when it's exported.
Sure, I'll export both. I'm gonna export the Excel and I'm gonna export the PDF, okay? The PDF always takes a little longer because it has pictures. I'm opening the Excel file right now. Can you guys see this?
Yeah.
Can you guys see the screen or no?
I can see it.
Okay. So here's my Excel file. Here's my for sale search 1 with all my details, my average and median. Here's my in contract search 2 with my average and median.
Sorry, man, I don't see your PDF. I see your screen, but I don't see the PDF.
Do you see the Excel file or no?
No, I think we only see the window you're sharing. So if you're in the...
Hold on. I gotta stop sharing and do something else. Hold on. Did you guys see it now?
Yeah, I see the Excel now.
Okay. I have to stop sharing and do a different screen share. So here's my for sale search that we just did. Okay. Here's my in contract search. Here's my sold, right? Here's my Excel file. All right, you have everything. You can manipulate it, do whatever you want. You got all your data. Okay. Let me do stop share and I'll do the other one now. Hold on. Sorry, give me 1 second. I think it's not downloading, John, for some reason. I may have to check on it. It's taking a little longer. I don't know if it's because of Zoom or something. But I'll get back to that person that wants a sample of this. I can actually just show you a sample in the report section.
Mm-hmm. Oh,
right,
perfect. That's great. Okay, so this is what it looks like.
Here it is. I got it.
Yeah.
We got it. It's coming because I included a lot of. If you include a lot of reports, you got to do it. All right, let me get off share and I'm going to show you guys what it looks like. Be right back.
Meanwhile, someone asked, is there a way to tell if a listing is refurbished, for lack of a better words, meaning it was taken off the market, but it's back on the market? So, Donald, I think you're asking, is there a way to tell if something was taken off the market and then sort of put back on the market through search?
Correct.
I don't think we have a handy, easy way, like one button kind of thing, but there are some workarounds to certainly find that. The tool that Noah's just demonstrating, where you basically take your search results and you dump them into Excel, might be, Noah, would that show? No, I think so. I think the way our system works is it can only be in one state at any given time. So if something was off market, it's now active, it's only going to show as active, because we don't want it to exist in multiple states. So the only way I think you can do it is you have to kind of look individually in the unit and look at the unit history to kind of see what was taken off market and put back on. But that's, if you'll go on, it's not on now, but on the site, on UrbanDigs, at the bottom right-hand corner of every one is a little feedback flag. And if you tap that feedback flag, say, I have an idea, and I just let us know what you'd like to see. Up there it is. That gets sent to Noah, me, and the whole engineering team. And if it's something we can just easily do, like if it's something we can just easily bang out, we tend to do it. But right now, I don't have an easy way of doing that.
Yeah, so let me just show you the report. Here's the report. And again, it combines 8 pages, if you see on top right here. Could you guys see the screen or no?
I see.
Yes, okay. So here's for sale, right? We showed 2 pictures. We're gonna keep scrolling down because I had 21 in there. Here's my in contract. And here's my sold, okay? And it's cool because if somebody clicks on any of these things, it'll take them to UrbanDigs, but it's gonna show you, okay? It's gonna show your agent right here. Like, so you, whatever your profile is, it'll show from UrbanDigs. Even if you didn't put the client in or anything, it's just everything you export is gonna protect you and just show you to all your clients. So that's what the report looks like. So you do that by search. Okay, you do that by search. Now let's go back to charts. All right, I just want to show you a couple things on charts. So you get your price per square foot and you get your median sales price trends. Notice how those say December, right? Both of them say December. You have to understand that when something closes today, Acris takes 3 weeks to 3 months to process that filing. So that means on April 1st, tomorrow, I'm going to publish January's bar. So tomorrow, that's going to update with the new month, meaning I'm skipping February and I'm skipping March. I skip 2 months. I do that because February and March, the data is not in. It's not complete. February might be 60% complete. March is 30% complete at this point, right? I got to wait another month or 2 to get that complete. And if I showed you those numbers in real time, okay, it would be wrong. It would be volatile and wrong. And what's going to happen is once the data completes and comes in, it's going to change. And then you're going to come back to it and you're going to be like, wait a second, what? It said plus 4% before. Now it says minus 3%. And the answer is, well, yeah, it was incomplete before. Now all the sales are in. Now it's accurate. And you're like, ah, crap, I sent the wrong data. So that's why that happens. So if you guys want to see what's going on in real time, let me just show you what I do, right? So price per square foot. I'm going to go look over here.
There was a question about price per square foot. So while you're doing this, I'll just try to answer it. So the question was,
Sure.
How do you get price per square foot for a co-op? So we will calculate price per square foot for a co-op if we have the size data. And as you know, co-ops don't normally have size data. So that's, at best, the number's wrong. At worst, it's generally misleading because no agent is ever going to say this 550 square co-op is actually 500 square feet. No, they're gonna round up. So normally the number is a bit inflated. So this number here that Noah's showing you, price per square foot, it takes every unit that has size information and and puts it out there. If you want to look for co-op price per square foot, I would suggest you stick more to median price for co-ops. I think that's a better measure of value for co-ops.
Here's co-op price per square foot. You know, and like John says, we have the data, whatever data is in RLS we got, and that's what it is. I personally wouldn't look at that. I would look at condo price per square foot. I would exclude co-op price per square foot just to get a better sense of the trend, because it's a more linear price action because it has all the data in it, and all the sales that we got get merged up and get counted. Whereas co-ops, 70% of the sales get not counted because there's no data for size.
And you can see a little spike there in the condo one. That was the mansion tax.
So my point, right, is that I could see right here 1454, but hey, Noah, that's December. Aha. Okay, so what do, right? You go to the dashboard. Go to the dashboard and you say closed. And then you use my little custom tool here and you say, I want closed from, February 1st to today. Click OK. Click search. 1,423 of them, right? So here's what I'm going to do. Create CMA report. Now you got to wait. That's 1,400. I'm going to go load all. You got to wait. Look at the little button down here. It's got to wait for it because it's a lot of things, right? It's going to take a few seconds. But you do load all, and then you do select all, and you got to wait. And here's my statistics. The median price per square foot is 1,270. That's how I know what's going on right now. Now I can go back to my search. Okay, click back to my search, change my custom period. So I just want March, right? So I'm gonna go, all right, let's just do March 1st to March 31st, closed. See how many we got, 508. Let's create the CMA report. Let's load all, give it a second. Look at the little thing, select all, 1288, 7.3 listing discount. So I can get the data. I can get the real-time data. No one's denying you data. Every closed search has every data of sale available as of, if it happened last night, I got it today. It updates at like 2 in the morning is what happens. The city updates at 2 in the morning. So we get the fresh data from the prior day at 2 in the morning. So by 6 in the morning, we have that full thing updated, right? Every building, with my building here, it's gonna ask me if I wanna leave. Yes, every building, right, has all your sales recorded right here. Sales recorded, 1,069 sales. This is a great tool. It's going to show you Hell's Kitchen. I'm going to show you this. Hell's Kitchen? What do you mean Hell's Kitchen? All right. Well, it's going to take you in my chart room and show you what's going on in Hell's Kitchen. Everything you need to know right here, right? I click on my sales recorded. It's going to show me every single sale recorded that came in. This was March 1st right here, this one. So you have all the data at your disposal. It's just in my chart room. In my chart room, when it comes to showing price per square foot and median sales price trends over time, it's going to be at a 2-month lag. Okay, so now what does that mean? That means this location that we're in right now, March and April, that's definitely 2 months. I mean, the question is it May and June? Those are the questions. March and April, we're not going to see that sales data until September, October, or August, September, October. So we're not going to know this dislocation. We're going to see the charts. We're going to see the sales charts are going to come in probably stronger because this market was getting stronger before this happened. I would not be surprised the next couple of months the next 4 or 5 months of sales data shows increases. And then you're going to get into August and September and October, and it's going to start to go down probably at a sharp rate. And you're going, oh, that's what happened with the Corona period. That's the lagging nature of sales. You have to understand it. It's a 4 to 6 month wave until it shows up in the charts, So in the meantime, you could use the dashboard as we go on over things. This is when you guys have to expand your social net. And this is when you guys got to all right, loom.com. Loom.com. It's a great technology, loom.com. Okay? I'm going to log out here so you guys can see what the main page looks like. This is it, loom.com. It's a little plugin. You download it. It's for free. You download it. It's a little plugin right here with your thing. And then you click it. It does a video of you with a little box. I do my podcast on this. And it does a screen share. So this is the time when you guys need to go to your tool of choice. Hopefully it's UrbanDigs for data. And you go do one-on-ones for your clients. Or do a weekly report every Tuesday or every Friday and send it to your buyers and your sellers, your whole contact list. You know what I'm saying? This is when you guys got to be like, I'm the guy. I'm your guy that's going to show you what's happening. and I'm going to do it in an engaging video conferencing way from my own home. And you got a buyer that's confused and on the fence. You got a seller that's on the fence. Send them a one-on-one. Do a 5-minute one-on-one and show them what you're looking at, and do a CMA report right there and show them what's going on and show them what recently went to contract and show them all those things. And call that broker of the recently that went to contract. Hey, those 2 listings that we're competing with, those just went to contract. Call the broker and get some intel. As I just called those 2 brokers. This one happened 5% lower. This one happened 10% lower. I just want you to see what we're getting. Be that guy that communicates this in a credible way, so that when we get out of this, the pent-up demand that John was talking about, you're all over it, and you're ready to go on it. You're ready to pounce on it.
Yeah, and I'll just follow up on that with one more thing. So everything that Noah was demonstrating here with the search tool on the sales is also available for rentals. So that market moves a lot faster than the sales market, a little more. While we don't know what the final rented price is for these things, we just have asking rents because there's just no incentive for anybody to actually post what it rented for. But those change really quickly, and they go up quickly and they come down quickly. So one of the things I might recommend, and this is sort of it's a new environment for all of us, but if there's a certain area that you're familiar with, if you're more familiar with the rental side than the sales side, track both. Keep an eye on, just take a look in a historical look at what the asking rents were a year ago, what they are today, what the sales were a year ago, what the sales are today for sort of the same size properties. And you can kind of get your own pulse of the market in terms of, all right, well, sales to rentals, all right, well, are rentals leading sales, or, vice versa, and just see, what's the rental market doing, come June 1st? How are we looking on the rental side? Are rents way down because there's a ton of vacancies and landlords are trying to fill them? If so, how's that going to translate to sales? My guess is that would probably not be good for sales.
Yeah.
There's tons of ways you can slice it or dice it, and I don't think anybody's really doing this right now. I see a lot of traffic from brokers, and it's great to kind of keep up with the social sphere. But if you could add that element of data, just little things that other people might not be thinking of, that you're going to come off awesome.
Yeah, and it's a great time to learn this tool right here. Like, John, here's rental, and I'm doing a rental in this area, and you're getting all the numbers you need. Rental price, lease sign levels, rented levels, asking prices. It's showing you a high level of asking prices to where their lease signs were and where the rented were. And guys, this little toggle right here, we added this like 4 weeks ago. This is awesome. Every search you do, we're going to let you just see all the different statuses. So you can toggle back and forth on the CMA page and just do your reports. And it's one of those things where you use it and you're like, that's nice. You know what I'm saying? And it helps. So I hope you guys will try it out. And again, there's a feedback flag right down here. Should you guys have more ideas that will make the whole flow of how to use all these tools easier and better for you guys.
All right, I think that kind of about sums up most of the stuff we want to talk about. Are there any specific questions on the market or how to use the tools, or any sort of intersection on those items before we head out? You guys have a new report coming out. I think Jason's going to maybe do some work on it, but it's going to come out, and it actually shows, I think the quarter to quarter numbers, if I recall, are actually up, because the market was sort of turning a corner as we came into this thing. So there is going to be a ton of consumer confusion out there. So just heads up.
And Q1 next year might be up too. Q2 might be up too before this hits. Yeah. Is there a mobile version of the app for UrbanDigs? Yes, there is. This is what I will tell you. We have an app in the App Store. However, being full disclosure, that's better for your search and collaboration with UrbanDigs. Okay. I would prefer if you guys use mobile web. You're on your phone, you just open a browser and log on to your UrbanDigs account there. That's much more in line with what the current UrbanDigs.com is. The mobile app is great if you use UrbanDigs for collaboration and search, and you have 20 buyers and you need to save searches and get alerts going. That mobile app is a great native app for collaboration. So yes, we have an app. Yes, we have mobile web. Mobile web mimics the desktop site much more closely. What are you seeing with currently in contract properties? Do you think that many sellers will be negotiating on those that are scheduled to close soon? You know, I'm hearing a range. Yeah. I'm hearing some that are just leaving it alone. And then I'm hearing some that are 5%. And then there's some that are asking 10%, but they're not getting it. And now they're at a stalemate. And then I'm hearing some that they're just considering losing their deposit, but they don't want to lose it. So now they're going back to the table, and the seller's realizing that and not budging. There's all sorts of crazy things going on. I'm hearing different stories from everyone. So it's like, I feel like we're in this acute early part of this process, and everyone's just confused. And we're like, not in the very first couple days of it, we're like, all right, 2 weeks into it, but we got another 4 weeks to go kind of thing. And we don't know if that's going to get extended. So everyone's trying to still figure out what the hell's going on right now. Like, brokers don't know how to close existing deals logistically. And these kind of things are happening across the whole spectrum. You know, in the higher price points, I'm hearing that there's some stalemate going on right there, and there's some negotiation that's wanted that they're not really getting. Sellers are not so quick to hit that bid. It's weird.
Yeah. So, you know, if you think about the sales process as sort of this machine, right? All the gears tend to sort of mesh, and you know, you get the signed contract, it goes into due diligence, or your due diligence goes into signed contract, and then it goes to the mortgage. Everything gets approved. Then you go to the walkthrough. Then you have the closing. So everything sort of meshes. So at this point, there's not a lot of meshing right now, and things are sort of, you know, they're grinding against each other. So, all right, well, we can't do a final walk. Let's say you got your signed contract and you're waiting on closing, but you want to do that last final walkthrough. Well, you can't do it. So you're waiting on that. Well, while you're waiting on that, maybe your mortgage rate lock is expiring. So you have a number of things which would have normally moved in sync, which are no longer moving in sync. And I think that there are some buyers that are okay with that. Perhaps they're cash buyers, or perhaps they've already arranged financing with their banks so that's not happening. And a lot of times those are the buyers that are sort of staying put because they're comfortable with the market. They're in it for the long haul. And then you have some buyers who this is happening to, and they're realizing, well, wait a second, I'm going to be losing, you know, my mortgage rate has ticked up, or is going to tick up maybe 1/8 of a point since I went into contract a month or so ago. So I might need to renegotiate here. So it really is everything kind of comes down to the specific situation of both the buyer and the seller.
Yeah.
So I wish there was a nice line we could draw, but it's really sort of a idiosyncratic path at this point.
And again, this is Jason. Do you guys see, or do you feel, and again, having been brokers yourselves, do you think that there'll be more of a premium on, you know, let's say apartments with outdoor space or 1-bedrooms versus studios when this is over because of, you know, a fear in the market, or, you know, I know you mentioned at the beginning kind of a desire for more space, and, you know, maybe a 2-bedroom versus a 1-bedroom, but do you think that there will be a long-term impact on, you know, desire for square footage maybe, or something like that?
I think it's a great question. I don't know. I think the best place unfortunately, the people who would have that answer before us would be Street Easy, because they're able to see the traffic and see the how many people are looking at 1-bedrooms now versus 3 weeks ago, or 2-bedrooms versus, you know,
yeah.
1-bedroom. We don't have any of that kind of traffic stat to kind of get a gauge for pent up demand, but I think generally, yes, I think space will become a little more of an issue than it was, because I think people are sort of feeling that. Who knows? It could be a golden age for the Catskills, you know, finally. But look, people revolve around the cities. You know, cities ebb and flow, and, you know, they're going to come back in the end. And the question is, I think location is still paramount. And I think that's one of the things that we saw sort of as this market started picking up. It was the location-oriented plays, the solid neighborhoods that were really starting that didn't really fall that much, and then started picking up first. If you look at, say, the Upper West Side 2-bed co-ops, they never really went down that much, and they sort of have held their value throughout this. So location and size there is certainly helping. You could have all the size you wanted in East Harlem. It was probably not going to help you from not really seeing many bids a few years ago, and still not seeing a lot of traction today. So location, I think, is still paramount, and I think size will certainly follow on that.
And you know what, Jason, I think we're going to get out of this with very, very little inventory. I think we're going to come out the other end with much less inventory than we would have been if this didn't start. So, we're going to.
Do you think that's mostly because of people who are not going to move, or do you think it's mostly because of people who are you know, deciding to, you know, we're going to have a lot of people buying? Like, again, there's pent out right now. Again, let's say we've had 2 to 3 weeks of nothing happening. We're going to have another month of that. Are these people who are going to buy in the next 2 months going to all flood the market and buy right when this is over? Or do you think people are going to wait to see what happens?
I think buyers are going to realize that it's not so easy to get a 20% off discount from what something was trading at par a month ago. So they're not going to get something for 80 when it was at 100 a month ago. That's number one. They're going to keep watching the market. They're going to see that it's not potentially not collapsing. And if we do reflate out of this, let's just be real. I mean, if we wake up in a month from now and the stock market's down 60% for whatever crazy reason and some crazy stuff, I mean, I don't have that information now to predict that kind of thing. Like right now, nothing outside of the craziness we just experienced and the stimulus, which is crazy amongst itself, crazy times, but we still haven't had a major credit event. We haven't had a Lehman. You know what I'm saying?
Yeah. It hasn't been anything with like again, the biggest shock to the kind of economy here is on the service industry. It's not on the financial sector for now, at least.
Yeah, and I think at the end of the day, I think this is going to be like a 4 to 6 month thing that affects our market. It'll probably come back. We'll be able to do business again maybe in 3 months. You know, hopefully everyone kind of comes back. It's gonna be a couple more months. But at the end of it, I think a lot of sellers are just gonna say, you know what, I'm not interested in selling at these at levels I think the market's operating at. So again, a lot of off-market spikes when sellers don't think they're gonna get the bids they want. That's the only reason. The only reason someone takes the listing off market is because I'm not gonna get what I want. That's really it. That's the main driver of it. Otherwise, they keep it on the market. Whether or not they're wishful or not wishful, is like, I prefer to sell. I want to get my money, but I don't know if I'm going to get it, but I'm going to hope that I get to come more close to it. You know, I'll leave it on the market. You know, so I don't think all of that inventory is going to come back so quickly, just in 3 months or 4 months. So when we get out of this, you know, with all that stimulus behind us, and there's like a wave of stimulus at some point, when we get out of this, I think it's possible we get into a period where there's not a lot of inventory out there. Resale. Very clear. Resale inventory, not new development. That's totally different. That was hidden already, right? All that shadow, new development, totally different sector. Big wall. New dev over there, resale over here. Resale, I'm talking about. I mean, right now we should have had 7,300 listings on the market. We got 5,800 instead. What's it going to be like in April? April, you usually see 2,000 listings come. 1,950 listings usually come on the market in April. We're shut down the whole month. How many listings are going to come on the market in April? 400, 300, 500. I mean, I don't know. Like, you know what I'm saying? We usually get 1,900. You know, so like that's you may get out of this and it's like, oh crap, there's not a lot of inventory there. And then it's gonna be a whole like whether or not they all come back, when they all come back, do they come on at the same time? Does some come on this week, some come on 2 weeks later, a month later? You know, all these things, and I just don't think they all come back at the same time.
Yeah, look, if we do come out of this with the reasonable time expectations of, let's say, early to midsummer, that's typically not our active season. And I think a lot of sellers are probably have taken off, and they're probably going to remain away at least until the fall. That'd be my guess. So who knows? Plus, don't forget, we've got trillions of dollars in fiscal stimulus coming. Interest rates are insanely low. Mortgage rates are most likely going to stay at or near record lows. They may tick up from here just because of the dynamics of the market. But there's a lot of reasons the government is pushing for people to buy. So the government is trying to put their pedal on the metal here. Let me just jump in here. A couple questions.
Yeah, I just want to say something before you say that. Listen, active season goes out the. There's no active seasonality. Everything this year is completely distorted.
Yeah.
For this year.
Yeah. Where do we think the market will go in a year? I've told my buyers who are waiting to close that the market will bounce back if they hold on to for 3 to 5 years. They're worried about the price that they are on contract. That's, I think, natural. They think they're paying too much. Thoughts on how to speak to them? Well, listen, there's really no data we have now. Price discovery for what's happening right now. And frankly, there's not that much happening right now. So the price discovery that we're going to get on these sales most likely is going to be sort of close to what it was a month ago. And really, we're going to have to look at the ones that went into contract in early April, if any. And we're not
late March or mid-March to April.
Mid-April. We're not going to find out the price of those until October, probably at the earliest, especially since things are just, not only are they slow, but then the recording process is going to be even slower. So where do I think the market's going to be in a year? I think it's going to be, I don't think it's going to collapse. I'll say that. I'll go on record saying we're not going to collapse. I don't know if you have any Do you have any thoughts?
No, I think look, we're in a dislocated window, and at the end of the day, you're gonna have a trend line that goes like this, up, 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 boop, and then it's gonna go down, and then it's gonna come right back up, and then go back to it. 2 months later, 3 months later, it's gonna go revert. Just like the mansion tax happened last year, John,
Mm-hmm.
and it brought forward all of those big sales last year. The mansion tax, July 1st, all those big sales were brought forward. Q2 popped, Q3 fell. You know, the headlines went nuts, and then we normalized right after. It's going to be the same thing.
It's quite possible. And someone mentioned, Pam Liebman likens this to 9/11. That's just a few months after we back with a lot of sales in the 1 and 2 bedrooms. That's also quite possible. I think in my estimation, the virus sort of caused things here. That was sort of the straw that broke the camel's back. But I think there are a lot of fundamental economic issues that sort of burst into the scene because that happened. So I think after the virus is sort of, we've kind of understand that a little bit better, then we're going to start to understand the economic side.
Then the social side.
And the social side. And I think that, listen, there's still a ton of unanswered questions. So I certainly think buyers are going to come back in 1 or 2 months. The question is, it still remains to be seen.
9/11 took a year. So like, you know, this is very similar to 9/11 in the sense of fear and shutdown. Because I signed a contract in October of 2001, and I was scared out of my mind. Scared out of my mind. They were evacuating buildings every other week. I was like, what the hell did I do? Turned out to be a great call. You know, and if you bought in March 2009, great call. If you bought in October 2008, great call. I'm just saying. If you bought after the .com bust, great call. This is going to be exactly the same. It's just going to be very thinly traded because buyers are expecting to bid 20% down and get that bid hit, and they're going to go in there, and most sellers are not going to be able to hit that bid. They're not going to be willing to go down there much. All right, I'll go up 15%. No, I'll go 5. I'll go 10. It's all right, I'll do 10. And so, all right, we really didn't dislocate as much. That's like what's going to happen, you know?
So,
but 9/11, it took a year. It took a year to get back. This is completely different. Completely different. Whatever the bottom of this is, it might take another year just to kind of like get back. I mean, it depends on how long jobs are, right? If we come out of this and we get those jobs back and the stimulus package gets the businesses back and Americans kind of stick together, support each other, spend money, everyone's going to want to spend money. That's for sure. Everyone's going to want to spend money after. They're going to get out. They're going to spend money. Are they going to go on trips? Go on airplanes? I don't know. I don't know how quick that is. Are they going to go out and do things and go to restaurants? I think that will start happening when we get over this, like in June, July. We get past this and it's been a few months. Yeah, there's an end there. But is it going to be May? I don't know. Are the jobs going to be there in July? These are the questions that answer that question right there. That's the question. Like, if we get back out of this and we can get the jobs back, we can get back to kind of normal, and this fiscal stimulus is a successful bridge over whatever this period of economic shutdown is, then yeah, I mean, we can get back within a year because that fiscal stimulus is going to be like a wave.
Yeah.
You know?
Jason says, what about co-ops? Do you think there's going to be an ease or tightening of board approval?
Virtual.
It's a great question. So one of the reasons why co-ops sort of escaped the main downturn from 2008 to 2010 basically was simply because I don't think they really tightened that much to the fact they actually just had approval process. And so when you looked at condos, you know, getting crushed down 30 to 40% during that time period, you know, co-ops were maybe down 20%. They really sort of, they hung in there. And I think that's going to be similar here in terms of the value. I think we have already seen sort of a bit of a wave of liberalization in the co-ops, simply because a lot of the luxury co-ops were just getting their butt kicked by new developments, because new developments were now suddenly in areas that people wanted to be in, and not in, say, Sutton Place, but they say Hell's Kitchen or Tribeca, Soho. New developments had all kinds of crazy amenities that these old co-ops didn't have. So I think they started to liberalize a little bit, maybe not say 50% down, maybe 30% down. But if you talk about the vast, you know, look, 60% of this market's still co-op. So if you look at those 80% of that 60%, so you talk about the bulk of co-ops, their restrictions aren't too onerous. I don't think they're going to really ease up too much on them. They may permit some different forms of financing. They may permit some different forms of some asset mixes. But I think it's to their credit And I think they're gonna want to look at that and hold on to that.
John, I think they're going to go virtual. I think the whole virtual board meetings might get more popular. Virtual board minutes review, like all these things potentially I think could get maybe virtual appraisals. I mean, we're going to have to deal with this kind of business over the next 4 weeks. We're going to get guidelines on how to transact. And that's what's going to be very, very interesting. I mean, because those deals that are waiting for board approval right now, like you want the market to function and operate through this period. That's what I'm saying. We need guidelines to do all that.
Yeah, I'll say, so I'm on the board of my co-op on the Upper East Side, and we had our first virtual board approval last week.
Excellent.
We all got on a call and tried to figure it out. We had the applicant join us on the call, and let me tell you, the call itself was kind of a disaster. People were talking over each other, we couldn't figure it out. But at the end, 5 minutes, 10 minutes into it, we kind of got the hang of it. And you know what? It's not so bad. And so you had a lot of sort of superannuated members of the board who kind of got a little more familiar with the technology, and it was not so threatening. So I think that's a good thing. Do we have data on commercial properties? If you mean commercial properties like storefronts, things like this, the answer is no. We do not want to poke the CoStar beast because that is an angry beast. Instead, if you talk about our version of commercial is sort of multifamily. So yes, we have data on multifamily. So you can go in the advanced search. If you say townhouse, it'll then give you the option to select how many units in the building. So you want to do like a 3-family search, a 5-family search, et cetera, et cetera. Yeah, we have all that, at least on the sales side. Some of these aren't listed as prevalently as we'd like, but we have. Oh, Noah's showing you now. Oh, someone had a FaceTime board approval for rental. That's great. That's perfect. I mean, this is kind of, I hope a lot of this stuff sticks because it will speed up this market 30 to 40%, just a lot of these little tiny details. All right, so Noah just did a search for the multifamily there. So that's how you do that. It's all there. Let's see, any other questions for us?
Yeah, and so yeah, we're running out of time, but this has been great. And you guys, if you have questions during the week, just email John or me, Noah at UrbanDigs, John at UrbanDigs, and if we have time, we'll get back to you as soon as we can to help you out.
Yeah, but also, I don't know if did you mention this at the beginning? We have our podcast called Talking Manhattan. We have an YouTube channel, UrbanDigs YouTube channel, and we just do a lot of videos with folks, agents from across the field. Just what are you seeing? What are your buyers seeing? What are your sellers seeing? What's happening in the market? I encourage you to subscribe to that, listen to that. You can either get it on through your podcast feed, on however you get your podcasts, or you can just go on YouTube and watch the video there. It's pretty great. There's some really interesting stuff. The last one that came out today was with Jackie Toplitsky of Element and her partner Barak Dunayer, and talking about how they're doing deals right now, what they're doing to sort of spice up their listings that are still on the market and make them a little more attractive to buyers who are sort of, now it's interesting because now the listings on StreetEasy are not in competition with each other, but they're in competition with Netflix and they're in competition with Amazon Prime and all these streaming services, because it's basically a question of, well, what am I going to watch today? Am I going to watch a listing walkthrough that's kind of boring, or am I going to watch the latest episode of, I don't want to date myself, but Game of Thrones or something like that. I don't know.
Tiger King's what's out there now. So
yeah, I heard crazy things about that. Yeah.
Well, thank you guys again to Noah and to John. We'll give you a little virtual round of applause. We really appreciate your time and everything like that. And again, if you're not on UrbanDigs, we'll get you on there. Just shoot me an email saying, hey, I want access to it. And again, the market report, which they amazingly do for us every quarter, is going to be coming out hopefully at the end of the week, if not by Monday at the latest. So cool. Thank you guys again for your time and your amazing insight into the market.
Thanks
guys. Good luck and be safe. Bye-bye.
Stay safe, please.